Picture a single flower bulb selling for more than the price of a house. Imagine a craftsman working all year, earning 300 guilders, while one tulip bulb, yes, just a bulb, is valued at over 3,000 guilders. That's 10 times a skilled worker's annual salary. Now, pause for a second. What kind of flower could possibly be worth that much? The answer is the tulip. In 17th century Holland, tulips weren't just pretty garden ornaments. They became symbols of wealth, status, and eventually, the centerpiece of one of history's strangest financial frenzies. This wasn't just about flowers. It was about human psychology, speculation, and the timeless temptation to chase quick riches. Tulipmania is often called the world's first financial bubble, a story of beauty, greed, and collapse. And today, we're going to unpack it together, not as dusty history, but as a living lesson that still echoes in modern markets. Tulips arrived in Europe from the Ottoman Empire in the mid-1500s. By the early 1600s, they had captured the imagination of the Dutch Republic, a nation thriving in trade, art, and science during its golden age. The Dutch loved tulips for their vivid colors and unique patterns. Some varieties, like the Viceroy or Semper Augustus, had striking streaks caused by a mosaic virus. Ironically, the imperfections made them rarer and more desirable. At first, tulips were luxury items for the wealthy. Owning exotic bulbs was a status symbol, much like driving a luxury car today. But as demand grew, tulips moved from gardens into markets. By the 1630s, contracts for bulbs were being traded like commodities. People weren't just buying flowers, they were speculating on future prices. This speculative fever accelerated around 1634. Merchants, artisans, even farmers joined in. Tulips became a cultural obsession. Prices soared, and stories spread of fortunes made overnight. But here's the twist, most of these trades weren't physical bulbs. They were contracts promising delivery months later. In other words, people were betting on tulip prices without ever touching the flowers. By February 1637, the bubble burst. Buyers vanished, prices collapsed, and many were left holding worthless contracts. While the economic damage wasn't catastrophic for the Dutch Republic overall, tulip mania became a cautionary tale, a vivid reminder of how speculation can spiral out of control. Tulip mania wasn't just a quirky episode about flowers. It was a mirror reflecting human behavior, markets, and the psychology of speculation. To really understand it, let's walk through the rise, the mechanics, the psychology, the collapse, and the lessons that still resonate today. The Dutch Republic in the 1630s was thriving. Amsterdam was the beating heart of global trade, with ships sailing to Asia, Africa, and the Americas. Wealth poured in, and with prosperity came a hunger for luxury. Tulips fit perfectly into this cultural moment. They weren't just flowers. They were exotic, rare, and visually stunning. Some varieties had flame-like streaks or deep, velvety colors. Owning them signaled sophistication. Imagine walking into a merchant's home and seeing a prized tulip bulb displayed like a jewel. It wasn't about gardening, it was about status. As demand grew, tulips shifted from being a luxury good to a speculative asset. People weren't buying bulbs to plant them. They were buying them to resell at higher prices. And once that mindset took hold, the fever spread quickly. Trading tulips wasn't about walking into a shop and picking a flower. It was organized around contracts. Buyers and sellers agreed on prices for bulbs that would be delivered months later, after the growing season. This system allowed speculation to flourish. You didn't need to be a gardener or even see the bulb. You just needed confidence that prices would keep rising. And for a while, they did. Auctions were held in taverns and guild halls. Ordinary people, bakers, brewers, artisans, joined merchants and nobles in bidding wars. Tulips became a social craze. Contracts changed hands multiple times before a bulb was ever dug up. It's striking how modern this sounds. Futures contracts, speculation, leverage, these are tools we associate with today's financial markets. Yet in 17th century Holland, they were already shaping behavior. The psychology behind tulipmania is what makes it timeless. Scarcity played a huge role. Rare bulbs, especially those with unusual patterns, created a sense of exclusivity. People believed they were buying something truly unique. Social proof added fuel. Everyone seemed to be making money, and when neighbors, colleagues, and even strangers bragged about profits, newcomers felt compelled to join. Fear of missing out pushed people to take risks they wouldn't normally consider. And overconfidence made rising prices feel inevitable. If tulips had doubled in value last year, why wouldn't they double again? These psychological triggers are powerful. They override caution and rational analysis. And once they spread through a community, they create momentum that's hard to stop. Every bubble has a breaking point. For tulipmania, it came in February 1637. At an auction in Harlem, buyers simply didn't show up. Whether it was fear, exhaustion, or a sudden realization that prices were unsustainable, confidence evaporated. Without buyers, the market froze. Prices plummeted almost overnight. Contracts that had been worth thousands of guilders became worthless. People who had borrowed money or staked their savings faced ruin. Interestingly, the broader Dutch economy survived. Tulipmania didn't trigger a national depression. Trade continued, ships sailed, and life went on. But for individuals caught in the frenzy, the collapse was devastating. The cultural shock, however, was profound. Tulipmania became a symbol of folly, a cautionary tale retold for centuries. The lessons are clear. Speculation thrives on emotion. Whether it's tulips, dot-com stocks, or cryptocurrencies, bubbles are fueled by psychology, not fundamentals. Futures and leverage amplify risk. Just like tulip contracts, modern derivatives can magnify gains and losses. Cultural trends matter too. Tulips weren't just financial assets, they were social symbols. Today, think of meme stocks, NFTs, or luxury sneakers. And confidence is fragile. Markets can rise for years, but when belief breaks, collapse can be swift. The parallels are striking. Tulipmania reminds us that markets aren't just numbers. They're stories, beliefs, and emotions woven together. Historians debate how severe tulipmania really was. Some argue that later accounts exaggerated the scale, turning it into a morality tale. Charles Mackay's 19th century book Extraordinary Popular Delusions and the Madness of Crowds painted tulipmania as mass hysteria. Modern scholars suggest the impact was more limited. But whether or not every detail was true, the essence remains: speculation can detach prices from reality, and when confidence breaks, collapse follows. That's why tulipmania endures. It's not just about flowers. It's about us, our hopes, fears, and the way we chase value. Think about the dot-com bubble of the late 1990s. Internet companies with little revenue were valued in the billions. Investors believed the future was guaranteed. When reality set in, the crash was brutal. Or consider cryptocurrencies. Bitcoin and other digital assets have seen meteoric rises and sharp collapses. The language of scarcity, hype, and FOMO is almost identical to tulipmania. Even housing markets show similar patterns. Rising prices create confidence, speculation spreads, and eventually, corrections occur. Tulipmania isn't just history. It's a template. It shows us how bubbles form, why they grow, and how they burst. At its core, tulipmania is a human story. It's about desire, the desire to own something rare, to belong to a trend, to profit quickly. It's about fear, a fear of missing out, fear of being left behind. And it's about belief, belief that prices will keep rising, that the crowd must be right, that beauty can justify absurd value. These emotions are universal. They are not confined to 17th century Holland. They're part of us. And that's why tulipmania still resonates. It's not just a cautionary tale. It's a mirror. Tulipmania wasn't just the story of a flower. It was the story of human behavior. In 17th century Holland, tulips became symbols of wealth, desire, and speculation. Prices soared, contracts multiplied, and ordinary people dreamed of fortunes. Then, just as quickly, it all collapsed. The Dutch economy survived, but the lesson lived on. Tulipmania became shorthand for bubbles, reminding us that markets are powered not only by supply and demand, but by psychology and culture. Today, whether you're watching stock markets, housing booms, or digital assets, the echoes of tulipmania are there. Scarcity, hype, and fear of missing out still drive decisions. So, what's the takeaway? Be curious, be cautious, and remember, behind every bubble is a story of human emotion. Tulipmania shows us that even the most beautiful things can become dangerous when desire outruns reason. And that's a lesson worth keeping close, no matter what century you live in.